good before and y'all can see my screen. Okay. We'll give it a few minutes here. Let everybody get up in here.
Harold?
Hey,
Look left and notice that both times price got to this level, hit and reversed the drop, giving us
Chill, Rock.
Then as price came back down to this level, we were looking for some form of price action. First, we had momentum loss through shrinking candles with a big candle, a small candle, and then this green candle form that is a very volatile candle. So when price tried to push lower. Hey, what up, baby? What's up, big dog? How you been, bro? So the second candlestick type to look for is the inside bar.
I'm watching someone stream, but I don't know. I hope my microphone's not on right now.
yeah, it's on, man.
Oh, I'm sorry.
It's all good. All right, guys. If y'all want to get the party started, we'll get it started here. Looks like we got quite a few folks up in here. Good deal. All right. So I guess we're gonna start off with the problem that we're running into with the girlfriend strategy here, which is everybody kind of getting tore up in the chop, so to speak. And let me see if I can swap screens here. Change windows. Okay. Can y'all see the Tradevate screen now?
Sir.
Okay, good deal. So, obviously this is the girlfriend strategy here. And kind of what we've been running into, or from what feedback I've been getting from it, is everybody's kind of, you're getting a, let me get scrolled in here. So you get a red to green move, or a green to, well, first off, you've got your cumulative delta line below zero, so you're looking for shorts. Well, you're looking for price to break through, right? Come back into it and take your short. Well, for right here, somebody would have potentially took this right here, this green move, and come back up, let price break below it, and then took the short right here, only to just get, barely in profit. And, if they moved the stop down, it was getting broke even, or just, it ripped up against them and they took a loss. You know what I mean? And it's just this constant, red, green, red, green, red, green, and it's just chop is all it is, right? And there's ways to avoid that. And the best way that I have found to avoid that is, you've kind of, you're looking at a 1 minute chart, right? So you're just getting a microscopic look into the market itself. So you're going to get into this chop. And the only way that I know to avoid it is if you follow my daily work on levels, you're going to know where there's likely to be chop at and where there's likely to not be chop at. So what I'm going to do is I'm going to swap my screens back to my trading view. And you're going to see my levels, right? Okay. And on my levels, these are today's levels, by the way. How you're going to avoid the chop is, first I'll take away price so you can see the levels a lot better, right? Well, you're going to see space in between some of these levels, right? You're going to have space here, space there, and you got space above 62. So you're going to know right off the bat. So 39.41 to 39.48 is nothing but chop, right? If it's in between these two prices, don't expect to make any trades because you're just going to get tore apart, right? It's likely to bounce up to this level, maybe down to this level, bounce up to this one, but bounce right back down. You know, it's just a no man's zone right here. You're not going to make any money. The only guy that's going to make money is your broker and most likely algos that are in here just, you know, having fun. You're looking to trade anything up above 39.48 or anything below 39.41 down to this 34 level, right? Or say price was going up, you know, you could look to make a trade from 49 up to 53, right? You wouldn't really want to do anything from 53 to 55, but maybe 55 up to 60, right? And anything above 60, you wouldn't want to do anything between 60 and 61, but maybe from 61 up to 74. You know what I mean? So you're going to know these are no man zones, right? This is the chop area, right? So you want to stay out of this as absolute much as possible. And I'll swap back over to the trade event so you guys can see what I meant by that. Maybe it didn't swap over. Okay, no, it didn't. Okay, let me get right here. Okay, now you guys see my trade event.
Yes, sir.
Okay, good deal. All right, so we'll map out the zones, right? So anything from 41 to 48, we're going to stay away from, right? Well, if you look, anything from 41 to 48, you would have not took any trade right there whatsoever. You know what I mean? Even though it's saying to go short, you're not going short right there because of the chop zone. There's just no money to be making. As you can see, it price went up, down, up, down, up, down. I mean, it tore everybody apart, right? But anything that is above 48 up to 53, right? Well, you still wouldn't have an opportunity to go from 48 to 53. 40, because you got a zero line here, right? We're not above the zero line. We didn't get above the zero line till, let's see, right here. Yeah, you wouldn't have been able to take that trade either, right? You wouldn't have took that trade. So we're going to have to look for the next level up is going to be anything from 55 up, right? So we'll go over here, find 55. You're still not above the zero line. So you're still not in a trade all the way up to 9:20 in the morning. You're still not in a trade all the way from, let's see, anything from midnight to all the way to 9 o'clock in the morning. There was no trade to be had right there, right? So now we're going to look anything above, anything above 55 to 60, and then anything above 61. So anything. Yeah, so we didn't get above the zero line this morning until we got above. Yeah, until above the 61. So, right, you could have took this trade right here. Let me get this thing, scroll back down. All right, you got above the chop zone right here at 61, right? You knew you were above it, right? So you could have waited and bought this pullback into this chop zone, right? And then you could have made a target right there, right? Or you could have yeah, you wouldn't have got stopped out right there. You could have took that trade. You would have almost got stopped out, but you would not have got stopped out. But you definitely would have hit profit, right? Up into that 70 mark, right? And then anything above 74, you'd been as good as well, right? So anything above, anything I'm swapping back and forth from chart to chart here with these levels. Yeah, so anything above 61 to 74, you're good, right? You can take a trade long from there. So you could have took a red to green move here, and you could have took it up and made profit from there. So you're basically trading in between your levels as long as you're outside of the chop zone and you have a retest back into the level, right? So that's what you're wanting to look for is any. I wish I could get both of these charts to share together.
Come on, Gaby.
You could share your monitor instead of the program directly.
I can.
Yeah, when you go to share screen, next to applications, there's a screen tab, and that'll choose monitors.
Oh. So y'all can see y'all can see all my screens now.
Yeah, right now we're seeing Discord, but yeah.
Okay, perfect.
Shoes on too. And a mask.
Okay, let me get these.
Come on, cutie.
Okay, good deal. All right, so we're looking at the levels right here, right now. So anything above 60 to 61, you're not taking any trades. 60 to 60, there wasn't nothing to take right there because we didn't pull back into the cloud. Anywhere from 60 to 61, but you could have took that trade back off of 61 up to 74, right? So 61 up, you would have already got filled right there. You know, on your bracket, you would have already gotten filled right there. But you could have took that trade very well again from another red to green move. You could have took right back up into that trade and took another long. And you could have easily made profit target on that one as well. As long as you're trading up to 74, which is right here, you're good. You could have took another from a red to green move. You would have got in right here, and you would have made profit target on that. So that was 3 for 3 right there. So let's go back from 55 to 60, right? 55. You couldn't have because you were actually below the zero line. So you would have had 3. You would have had 3 for 3 winning trades today, right? And it would have been from at 9:52 to 10:08. From 10:30 to 10:40, and another one over here at 11:44 to 12:02. So you would have had 3 for 3 winning trades.
Can I ask a quick question?
Yes.
What made you designate the $60 and $61 marks as a chop zone?
It is just based upon the volume profile. Ultimately, what it is right. If you've got a lot of volume being conducted right there, right? Somebody was doing a lot of business at both of these levels for whatever reason. So you could expect price to either become resistance or support, but there's also the probability of price getting to there and just chopping in between these two, right? Just because of previous volume, there was a lot of price conducted, a lot of volume, buyers and sellers doing business in between these two areas and at these.
All right, I got it. Thank you.
Yeah. But for instance, like over here, if you would have been involved on anything this morning or anything in between the price level of 39.41 and 39.48, which on this Trading chart, you would have been looking for shorts, right? Because your cumulative delta is below zero. However, that you would have not been able to take a trade in there because you knew right off the rip that was a chop zone. So there was just nothing to do right here. I mean, you could have, like for instance, you could have played this short and made one, but yet right over here you would have lost, right? And then you could have done it again right here, and you might have broke even, or somewhere over here you liable to lose. Like right here you would have lost, and it's just back and forth, back and forth. So you get chopped up real bad. So if you really want to stay out of trouble, watch these levels. You want to trade where there's gaps, right? You want to get in when it comes out of these levels and touches back in up to another level, right? You want to stay away from this little chop zone, but if you can get above it and pull back into it, right? Trade it up to the next level, right? Do not stay in these two. Let it go above it, pull back into it, and trade it up to the next level. And that's where those three trades, where you see the cumulative delta go above zero, you're going to see that price was 39.61, 39.61, right? Price busted above it, pulled right back into the cloud. The cloud right there where my level, right? And you would have traded it on. You would have traded it up, which you wouldn't have got. You wouldn't have got all the way to 74 because your bracket would have took you out before then. But you still would have made a profit, right? And then likewise again, right? It would have pulled right back. It would have turned back red right there. You could have gotten right back in, done the exact same trade, traded it up. And you could have traded it up all the way to 74, And which after 74, it didn't really offer you much. I mean, you could have got in right there, but there was just nothing above. I don't have anything above, for all time highs. So nothing there after that. Does anybody got any questions in terms of how to avoid the chop and keep yourself in the position to make trades where where price should tend to move to? Right? You're either going to be right or wrong. Still, nonetheless, you're still going to take a loss at some point, but at least you know that you have room above you rather than 2 or 3 points right here where you're just going to get stopped out or break even at best. Does anybody got any questions?
Hi, I've got quick.
No, it makes sense to me, man. It's clear.
Okay, cool. As long as it's clear, that is the ultimate goal. All right, so we'll back out of the trade of 8, and we will get right on trading view here. All right, and for anybody that's having problems with where I'm setting these levels and how I'm setting these levels, I'll go through it real quick. It's super easy, not difficult at all. All right, so let's find. Say price didn't exist this morning. I need to find. There we go. I'm trying to get this thing where it was where I set levels up this morning, right? So everybody can see how I set the levels up this morning. hard to get lined up like today didn't exist. You know what I mean? Okay, so you basically now it's pretty well in line, right? There's some of these volume clocks that didn't exist. Let me remove price, right? Okay, are y'all? You can kind of see where my lines get put in place at, right? They get put in place at where there is the highest amount of volume, right? All that means to me is there was just a lot of business conducted there, and this is a no man's land, right? You just don't want to trade there. And you try to find the spots where you have the most, most amount of space in them, and that's really where you want to take your trades at, or at least where to stay out of trades at, and where you should be looking to take trades. That's ultimately what these levels give me, and that's it. At the end of the day, they're just there to protect you. And if for instance, if price decided to bust through every one of these levels and then come back and push back into this level, well, I feel pretty confident in taking along there, up to this level right here, because I just have so much that's going to keep me from getting stopped out, right? There's just so many other things that's going to be in front of me, or at least in front of my stop. You know what I mean? Or rather, had you just took a trade on the breakout, it's very easy to come back down and pop that level or weak you out or whatever. So that's why the levels are there. It's just to keep me out of trouble in a nutshell. But I'll show you this morning what I got into and why I got into it. So this is the secret sauce, right? So this morning at 4:30, I got up, and there's some things that you're not seeing on this chart right here at this second, right? And I just kind of keep it to myself, but I don't mind sharing it with you guys because it'll help you. But now that you know why I have the levels there, this is going to make a lot more sense, right? So obviously, you guys know I trade on the cell phone 99.9% of the time, but for the rare chances that I get to trade on laptop or whatever, I can see multiple charts at one time, but for the most part, I don't get to. So I use these multi-time frame exponential moving averages, and what they do is allow me to see multiple charts at one time at a glance. In contrast to a line, right? So, and what these are, right? I have a multi-time frame exponential moving average of a 60-minute chart, right? And it's pink, is what you're seeing. Okay. And then I have a 15-minute, which is green, And in my mind, right, as long as the green is above the pink or the 15-minute is above the 60-minute, I'm looking for bullish moves only. I'm looking for upside moves. For the chance that it's below it, obviously I'm looking for short, So that's where the premise is set, right? Where am I bullish or where am I bearish? Okay. Now, the next thing that I'm looking for is you're going to see an indicator pop up down here at the bottom. And this is nothing more than a souped up MACD, is all this is. And it gives me an idea where divergence is. And we're about to get into some Fibonacci stuff, and we're about to get into some Elliott wave stuff, okay? So bear with me. All right. So what I'm looking for bullish moves. Well, I'm also looking for bullish divergence, right? Somewhere through here, And ultimately, what I like to see is let me open this up a little bit so you guys can see better. So I like to see a lower low in price, obviously, and a higher low in indicator. Well, there's a certain setup that I like, right? And you're looking dead at it, right? Square in the face. Is a low and then a dip above and a dip below, right? Without this indicator surpassing the zero line, okay? We got a higher low, we got a lower low, right? To me, the low is in right here, okay? Don't worry about this 39.41 level. All that is just a level, right? Well, we know now that there is bullish divergence at hand. Okay. So now I am looking for opportunity, right? 100% opportunity. And there again, back to what I was telling you, I'm looking for either a deep pullback or I'm looking to get in above the 49 because, again, this is the chop zone, right? You really don't want to diddle in the middle right here because you're going to get tore up. Well, this is where the Fibonacci comes in. Okay.
Fibonacci letter. I've never heard of that.
So you guys, I'm about to get rid of this MACD real quick, but you guys are seeing what I'm seeing, right? You're seeing the divergence, right? Lower low in price, higher low in indicator, and it's the perfect setup, right? You've got the dip, you got the dip back up, and you got the small dip back down. Okay. To me, this is the bottom, right? Okay, so I'm gonna get rid of it real quick.
So I
Kinda
think there's
clear
an
this thing up a
indicator
little.
for the divergence on there. Makes it easy on my eyes.
Do what now?
Are you using TradingView, right?
Yeah.
I think there's a divergence indicator. It gives you like divergence for like I think it's like 12 indicators. It makes it real easy on your eyes to see it.
Oh wow. Yeah, this one here is just Chris Moody's MACD custom indicator, multiple time frame.
So type in divergence up there, and it'll make it real easy on your eyes.
Okay, let me get through this real quick, and I'll do that. All right. So I'm gonna get rid of this indicator real quick. Get us back in a full screen. All right. So this is what I was looking at this morning. I was looking at a deep pullback, right? At this point, I'm thinking, okay, the bottom's in. So I'm thinking automatically, I'm looking for a Fibonacci, right? So I come over here, grab my tool. We find the high, right? I'm looking for a deep pullback, right? I really like to see a 618. Well, right there was a 618. Luckily, I was able to grab it off this level, right? The 39.44. I wasn't going to take it off these Fibonacci levels. I had already drawn this, so I was willing to take a trade right here at 39.44. Well, at that moment, I knew in my mind the bottom was in. So now I get to take this retracement, right? We pulled all the way back down to the 786, right? Let me go back up here. Now I'm going to get my target tool out. Well, hold on just a second. I got to pull my chart back up a little bit. Okay, I'm going to get my target tool out. And I just messed up. Let me delete that. Try this again. Okay. Now, I pull up. I get my target tool out. Okay. And from there, I set my targets, right? Because right now, in my mind, here's what we are, right? We're going to do a little bit of Elliott wave, and we're about to do a little bit of Fibonacci work, okay? So we have 1, 2, 3, right? That's what we're looking at, right? So we pulled back to the 7.6 or 7.86. My first target is that, right? 7.86, and you can see that's where my target was this morning, right there. That was my first target, and it hit it perfectly, right? Okay. My next target was all the way up here at the end of the Elliott wave pattern, right? At this 2618 level, right? And it was 39.72. And as you can see, it hit it perfectly, right? That's where I sold it right there. That was that trade, okay? So, and normally what I do, I didn't take one off. So normally I would have entered 3 contracts down here at this 44. At the 44 level, I would have sold one contract when we got up here to the 786. And then I would have sold another one when we got up here to the 1618. And I would have sold the last one up here at the 2618. Okay. That's normally the way I would take that trade, but I didn't take that trade with 3. So I just took one off here and I took the other one off up there, you know. But that is how that's how this ES trade shaped up this morning and why it shaped up the way it shaped up this morning. was because obviously I was looking for bullish moves. I seen the divergence, right? To me, that was the bottom. Okay, I looked for that deep pullback. I just took my tools out and went to work. Right, marked out the level. I had a level sitting there at 44. I felt confident in taking that trade off the 44, and then we just busted through. We just worked our way up. But even if you had not have been able to take that trade down here, as long as you had that same premise in mind, right? You could have took that trade off any of these levels. As long as we busted through and pulled back into it, we took off to the next level. You know what I mean? We busted through it, nailed back into it, took right back off. Even up here, you had plenty of opportunity. We busted through it, we pulled back into it, and we just took off. And that's what these levels do. Ultimately, that's what they're for. Is they give me areas. They give what in the world? They give me areas in which I just messed that up a little there. Let me remove that. They just give me areas where I can put myself in the best location to trade upward or downward, whichever way I'm trading, and have the littlest amount of risk. You know what I mean? If I'm wrong, I'm going to be wrong, and I'm going to be wrong pretty quickly. And I'm okay with that. But it does offer me at some level of edge for price to continue in that direction as long as we bust through it and pull back to it. You know what I mean? That's what these levels are all about. They keep me out of trouble and they give me good trade locations. Because you would have to be doing this a lot in order to catch us down here at this 44, right? You would have had to been looking at a lot of things this morning to understand this is where you should probably get yourself involved. But you didn't have to, right? You could have got involved on this level. You could have got involved on this level. You could have got involved on this level. You would have never got involved here. But you could have, it was multiple locations that you could have got yourself involved in this big old move this morning, And I was just lucky enough to catch it. I was just up and at it at that time and, ripped 27 points in my favor. And this ain't something that just happens every now and again. This is maybe 2 to 3 times a week that I'll catch a big move like this, and you just sit in it because you're confident, right? You've got your targets, and it's just a deal where you just put yourself in the right spot with a lot of things, and it gets the wind at your back, and you just got to be there for the ride, and as long as you've got your plan laid out, you don't have to worry about getting scared. You don't have to worry about taking profits too soon. Or you don't even have to have FOMO. Even if you just trade off my levels, you still don't have to have the FOMO because you just seen right there how many times I counted. You could have got involved in this trade and literally had very little risk and almost would have been in the green as soon as you entered the trade, on any of the, retests of the levels. So that's kind of what happened this morning on the ES trade. If anybody's got any questions on why I did what I did. Do I now?
I said you killed it. Good job.
Hey, no problem, man. No problem. No problem.
Question for you.
Yes.
When you're dealing with the chop areas, is there a certain amount of points that you just kind of don't deal with? If it's like a 10-point chop or if it's like a 5-point chop, is there something where you say, I'm going to set my levels. This is not what I'm going to do.
Yeah, it's all based on risk reward. If you can't viably get 2 to 1 out of it, it's not worth it. You know what I mean? So you figure your commissions, you figure your 2 to 1. If you can't viably get, make decent money off that in between the 2 levels, then yeah, you just need to stay away. You know what I mean? Because it's, we're not really looking for peanuts. We're trying to make real dollars. Or as many of them as we can.
Appreciate it.
Yeah, no problem, man.
So what size do you use on your volume profile for the bars?
Oh, right here. I'll show you exactly what I got. So the VP VR is what I use. Let me get to the settings. Just the number of rows. Row size is 100. Value area 70.
So you don't really care about the value areas or the point of control?
Negative. It does not matter to me. And I mean, I'm mapping them out either way. It's just like they don't really matter to me. But when we go back out of this, I'll show you what matters the most to me. And it's not what you think. Obviously, point of control, but I still have point of control mapped out. It's just not. It doesn't mean more to me than any other area. You know what I mean? So what I'll do throughout the day. Let me get rid of these so you guys can see these levels a little bit easier. So at the end of the day, what I'm looking for is, let me get rid of this mess too. I can't stand all this clutter on the charts. It drives me crazy. What I'm looking for is these areas to be blown through without a retest of them, right? Which that level, it got retested. This level got retested. This level got retested. This level got retested. This level just pretty much got retested. Here's a blatant, obvious level that never got retested, right? You had a candle that just blow right through this level. Well, this level right here, it will go to yellow because it never got retested. And until price comes back and touches that level, it's going to stay yellow for eternity until price touches it again, right? And so every evening,
that's a level that would mean more to you then.
Yes, because when we got back to this level, there was sellers that just completely stepped away from the market, right? The buyer was sitting there and the seller just ran away. So obviously price just took on off. Well, when we get back down to this, typically into the future, whenever that may be, price typically will come back down here and treat these levels as pivots. And typically it's in whatever direction that level got broken. Obviously it's to the upside. So I wouldn't be surprised if price come back down here and touched this 39.60 and took back off. You know what I mean? Now granted, that's no guarantee. I've seen them fail, but they do serve as pivots, not maybe to an all-time high, but they do serve a pivot up to a potential next level. You know what I mean? And so that's how my yellow levels come to be, right? You'll see. And in the whole day, that was the only level that really never got retested. All the other ones got retested.
You're a big Elliott wave guy?
No, it's not so much as a big Elliott wave guy. I do believe in it, but here's the problem that you get into Elliott wave.
The different counts.
Yeah, exactly. You're going to get 10 different people, and they're going to have all 10 different counts, right? So to me, the only spot that really matters to me is when the only time I ever consider Elliott wave is when I see a divergence, right? You're going to see 5 moves up and potentially 3 legs down. That's the only time I ever mess with Elliott wave, or it comes into my mind, is when I see this divergence and we actually play into that deep 76 or deep 618 pullback. That's when I really start thinking Elliott wave. Okay, because I want to be in that third wave.
Yeah.
You know what I mean? And so that's the way I look at that deal.
So now just quick question back to the levels.
Sure.
You initially set the levels before regular trading hours open. So you're using the overnight session volume profile, right?
Yeah. So when I set levels here in a little while, I plan on probably doing a little overnight trading. So I'm not going to take away my levels right now because I'll need these because these are good for tonight. Okay.
But do you adjust those levels as the day goes on, as you get the regular trading hour session?
No, none of
see
these
more
levels
volume come in?
No, none of these levels get adjusted. So these levels that you see right now, they were good for today and they're good for tonight. Well, they're going to start to diminish at some point in the morning. You know what I mean? Early morning, they're going to start to diminish. The value of them is not going to be as good. And so what I'm going to do is so we had a bunch of volume come through today, and it's changed some of these levels. Okay. So I could set levels right now for tomorrow if I wanted to. And the only thing that I would ever have to adjust would be if we made new highs. Okay. If we went on up in here to 4,000, I would have to set some levels up here if we conducted volume up here. You know what I mean? I still wouldn't be concerned about these down here because today's volume is what would maybe set these levels if I set them right now. Does that make sense?
Yeah, that makes sense. Yeah.
Okay. Yeah. What you got?
So you're setting your levels at night? Because I'm the same as you. I'm 99.9%. I'm on my phone. So
awesome.
I'm obviously having a tough time drawing levels because of just the screen size. I mean, I've got a stylus for my phone, which is great. It helps out with the lines, but I mean, I can draw nowhere near as many lines as you have right now. So
no, I'll be honest with you, man. I've always done it on my phone up until about this weekend. I think, I got this computer this weekend.
Okay, so I'm the same as you. I use the Tradeovate, but I pull up the web base. I don't use the mobile, the Pulse.
Okay. Now I don't. All my charting is done, even on my mobile phone now, is done through TradingView. The only thing I ever do in Tradeovate is just execute. That's it. Everything else is all my charting, all my homework, everything is done on TradingView.
Gotcha.
So if you're looking for a mobile app, man, this deal is literally light years ahead of anything. I mean, light years. Everything that I can do right here on this laptop, I can do from my cell phone. And it's awesome because, like, if I want to draw a horizontal line, right, on TradingView, I can pull my arrow wherever I want to pull it, like just to that right there. Then I'm set perfectly right there. You know what I mean? And you can do that on that cell phone as a crosshair, so it works fantastic. I mean, you can get levels dead nuts. Just make sure that your volume profile is set at 100, but otherwise you're going to get zones rather than down to ticks. You know what I mean? I like lines. I can't stand zones personally.
Gotcha.
Yeah, cool, man. It's worth every penny of it. I think I pay, I don't know, man, like 50, 60, 70 bucks, something like that for TradingView. I mean, it pays for itself time over again. It's awesome. Yeah, so I mean, if you notice, like these yellow lines, they were just done in the past, right? Price had touched it and it just never revisited it. Now, when it comes down here and touches it, I'm just going to probably delete the line altogether. But if it does, then at some point in time in the future it will. I just don't know when. But it's going to serve a purpose when it does. In the future. And hey, one other thing I want to show you guys. Hey, does anybody got any more questions before I jump off this screen?
What's your preferred time frame?
And delete. Sorry, go ahead.
I was just going to say, what's your preferred time frame for setting lines?
You're looking at it 5 minutes. Everything I do is on 5 minute chart.
So when you do go and delete old zones, you delete the blue zones that have been touched, but you leave the yellow ones until they get retested.
Yeah. So when I set all my levels in the morning, or this evening, I'm gonna delete this red line right here. I'm gonna delete every one of these blue lines. I'm gonna delete the settlement line. The only line that I'm gonna leave is this yellow line, and then I'm gonna set levels all the way down the volume profile.
That makes sense.
Yeah. Now, there again, these red lines, they're not based off any bit of volume profile whatsoever. They're based off of, so the ES kind of has like a suggested high-low move. When I say suggested, in an option market, you're going to find open interest that suggest how big this move is ever going to be. You know what I mean? Before big hedges are starting to be wrong. And they're really not going to be wrong because, you know, they're not going to be pushing price that far up against it. And so these red lines are based off of kind of where hedges are made off of overnight highs and lows, but yet also you got to take into account what the open interest is in the options market, which allows these lines to be set. And it's kind of a moving target, right? These levels will fluctuate just due to the overall price of the market. So, you know, one day the levels might be 40 points. One day the levels might be 25 points. It just depends on there again what the open interest is in the options market. So if you ever see these red lines, that's what they are. They're not based off volume profile at all.
Do you take into account the psychological numbers? So like 4,000 even,
No,
you know, the numbers that people tend to really stick to?
negative. No, it does not. No, I mean, because that's not part of what I do. I mean, it's not part of my strategy. Not to discount it, and not that it doesn't mean anything. It's just, you know, I've seen it blow through 13,000, and I've seen it stop at 13,000. You know, then I've seen it stop at 13,005, and I've seen it blow through 13,005. You know, it's like it's all relative. You know what I mean?
All right.
I did want to show you guys something. I personally think's pretty sporty. So back to the same move that I traded off of the ES this morning, right? And I do this on the regular. You know what I mean? I find these moves, and when I find these moves, I try my best to take advantage of them. You know, and there's something I had found right here on the MES and where I think that we're headed. And take it for a grain of salt because it might just, you know, I could be right or I could be wrong right here. Who knows? But I take these trades over and over and over again, and they win a hell of a lot more than they lose. That's for sure. But anyhow, obviously you see the divergence, right? Lower, you know, the higher low, lower low in price, right? Now you see the run up and the deep pullback, right? Now let's do the Fibonacci tool here. Okay, we pull back into the 7861. Ah, dadgummit. Okay. Scroll this jewel back out. All right. Here is a target, right? The first target. It was hit. I mean, to the T, right? Perfectly. Right? That's where I would have took profit the first time. All right. Second time is profit up here at 14,857. Okay. Third time is going to be all the way up here at 16,260. So if anybody ever asks me where I think the market's going, I think that's where the market's going. I think we head north from here. We've got to attack these two levels. For what it's worth, you know what I mean? And these are swing trade levels that you're looking at right here on the MNQ. So, you know, a little more profit in between levels, you know what I mean? 200-300 points. But anyhow, just the overall picture where I think we're personally headed, this is what I'm seeing, you know, and I could be dead wrong. You know, don't let my, you know, my predictions sway your opinion by no means. But I'm just telling you what I do in terms of trading goes and how it affects my decisions. And this is what I see. This is what I look for. And quite frankly, this is where I make the most amount of money is off of these kinds of setups, you know, where I'm pulling, you know, 20, 30, 40 points off the ES and maybe a couple hundred points off the NQ, you know, in a day is you watching these 5-minute setups for these kinds of divergences and then these 5-legged runs. You know what I mean? Pretty neat stuff. I guess, this is kind of the secret sauce for me. A lot of people's going to scoff at it and think, it's so subjective to, because everything you hear about Elliott wave or everything you hear about Fibonacci, it's like, yeah, it is subjective. Well, it is subjective just if you pulled a low from here to here and then just try to run something up or any of these dips, you got to kind of find a point, right? Where's the point? Well, for me, the point is always at the divergence, right? That's the point for me. If that level does not get broken or that low does not get taken out, to me, that becomes a low and it's valid at that point, and I feel confident in buying any deep pullback into that and then doing the math upward. I don't know. Just something to play with, maybe something that you guys can take out of that might help you in the future, I don't know. Does anybody got any questions about that?
I think so.
Huh?
You're thorough.
You guys good?
That was great, Magnum.
I have a question if you have some more time.
Yeah, I got all the time. What you got?
Can you go over a trade that you took that failed?
Can I go over a trade that failed?
Yes.
Let's see.
That's a nice one.
I had a bunch of them Friday. Well, that's the problem. It's hard for me to go over trades that failed just because trades that have failed are based upon levels that are no longer there. You know what I mean? So if I go back a day, I don't know where I lost money at. I know I had a ton of break evens. I had like 28% break evens. And it was just simply being on the wrong side of the market for me is what the problem was. But it's hard for me to go over that because I don't have any levels from the day prior because everything that I get deleted the day before. You know what I mean? Or the day after. Does that make sense?
Yeah. The reason why I was asking is you're taking 20, 30, 40 handles on an ES or a couple hundred handles on a NQ. What's your risk? What's your risk off of an entry like that? Your reward's humongous, right? We're all aware of that, but what are you risking?
Yeah, right here. I'll tell you exactly what I risked. This morning, I risked, where are we at? Let me get back to this morning at 4:30. 4:30. I risked right here. That was my stop loss. From 44 to 41.
So you risked three handles and you locked in
27.
27.
Yep.
So you enter and exit trade strictly off the 5-minute time frame. You don't even look at the 3 to 15, the hourly, nothing.
No, this is my multiple time frames, right? The green line's my 15-minute. This is my hourly. If I really get in a hot moving market, like some of these hot moving moves, if I can't find a pullback to buy, then I'll go back down here on this 1 minute. Kind of changes the scenery quite a bit. But you can see these retest on a 1 minute versus, like right here, you could have never seen that retest right here on, 30. This is a perfect example, right? Goodness gracious, what have I done? Okay. See this level, this 39.60? Price just blew through it. Okay. You didn't have an opportunity to buy right there if you were looking at a 5-minute chart because you was looking for a retest of this level. Well, if you go back onto a 1 minute, and let's go back to this yellow level, you had every opportunity to buy it off that level, right? You seeing that? We busted through it, pulled back into it, took right off. Pulled back into the next level, took right off.
Yep, and I've actually found that strategy to be very successful, especially when you have a strong bull market overall, when lots of advancing stocks, lots of buying, you're not going to be able to get a deep pullback off of a higher time frame. You've got to switch to a lower time frame if you want to get in for the move that's left on the table.
You got it, brother. I mean, even on the NQ, I mean, you see, I've got a 30-second chart up because sometimes on the NQ, a minute's not even slow enough. I mean, or fast enough. You need to even get lower than that. So 30 seconds is sometimes something I'll venture out on the NQ to try to trade off of. To find these little retests. But there again, when I'm setting these yellow levels, obviously you see the retest right here on a 1 minute chart. But I don't ever do any of my analysis on the 1 minute chart. Everything I do is based on that 5 minute chart. Everything I do. All of my divergences, all of these 15-minute and 60-minute breaks, everything is based off the 5 minute. So this level means something to me on the 5 minute chart. It don't mean nothing to me on the 1 minute other than that was an opportunity,
Yeah, the bigger the time frame, the better the picture of the move, right? It's more solid than a smaller time frame.
Yeah. And the thing that I have found dealing with this stuff is, a lot of people, they're like, well, I don't trade anything off of less than an hour or less than 30 minutes. But to me, I mean, we're trading intraday. You know what I'm saying? Like, if you looked at this move on a 30-minute chart, where did you have an opportunity, man? It's like, you know what I'm saying? Like, here's 4:30. Like, where is your opportunity right there? I mean, you might get an opportunity over here, but it's like, how do you trade that intraday? I can't personally. So I have to dial everything way, way, way down and for it all to make sense of me. You know what I mean? On an intraday basis, like all of this moves, the pullback, these two targets, all those meant something to me on a lower time frame. But on a 30-minute time frame, how could you have possibly made that analysis? You know what I'm saying? It's impossible. You would have never ever caught the divergence. You know what I mean? There's your low. That's a higher low. I mean, it doesn't show you anything.
Yeah, the higher time frames I strictly use as overall market sentiment for the conditions ahead. That are we more bullish, more bearish, or are we neutral? That's all if you trade the higher time frames, you better have a higher stop loss, right? Because you're entering in a situation that takes 30 minutes for a single bar to close, or an hour for a single bar to close. So you're going to have wide moves, especially if you're trading the Nasdaq.
Oh yeah, I mean, each bar on a 1 minute chart is almost 30 points these days. It's insane. It's tough. I mean, and I just, the thing that I have to do is I have to keep everything super simple for my mind to process it. And for me, this is my 15-minute chart. This is telling me what the 15-minute chart's doing. This is telling me what the hourly chart's doing. And are we above it or are we below it? You know what I mean? And that kind of gives me sentiment in the near term, along with what the dollar's doing. I really pay attention to the dollar when it comes to sentiment near term. The 10-year, more so for longer, overall market sentiment, what we're overall doing. But then again, you got to kind of take into account when you're running these two, the dollar and the 10-year, you got to think about the Fed and, man, I'm a damn guy running the tractor. You know what I'm saying? Do I really know what the hell the Federal Reserve is going to do? I just know that they don't want to crash the economy, and the only product they have to sell is debt. So, in order for them to survive, they just got to sell more of it, so you can't really fight the Fed. So you just got to assume that this stuff, at least this stuff's going to get balled up at some point. You know what I mean? And that's the kind of the way I look at it. Honest to goodness is, I pay attention to the dollar, but more so, I pay attention to this. You know what I mean? These two time frames, along with this 5 minute, and along with this indicator right here. For like right now, I would be happy. Let's just go over something that potentially could happen at the exact moment, right? That might be pretty cool. We know we've got a level right here at 39.60, right? Well, we made a low. We didn't quite come into it. This level matters. So it's very plausible. We know we're looking for a bullish move. It's very plausible that this thing rolls back over. This deal rolled under, rolled back up, and could roll back down, and this make a higher low and touch that 39.60 and then blast. You know what I'm saying? Very possible. Back up here to the 39.74, and quite frankly, if that took place, I would take this low, and wherever that high went to, I would be looking for a pullback somewhere into here and do that exact same move that I done this morning up here for another long to no man's land. You know what I'm saying? Over 4,000. That's very plausible. I mean, it's got the right setup. You know? You guys seeing that?
Yep. Yeah, you're looking for divergences using the MACD histogram against price, right?
Yeah, but it's very specific, right? I'm only looking for divergences, not just any divergence either. You know what I mean? You're going to find divergences all over the place, you know? But you see this divergence right here? This was a divergence. I didn't like that divergence at all because when we made the low, we made several moves up before we made another low. You know what I mean? And quite frankly, that doesn't do it for me. I have a very specific thing that I look for, and that very specific thing looks just like this. Okay, we made a low, it popped back up and popped below. This line never crossed up into zero, and it never made more than one dip back up. But we made that lower low in price, higher low in indicator. It doesn't matter to me if it's almost flat. I just need to see this right here take place. And if it's inside my levels and we can get a deep pullback, I feel very confident in taking a trade anywhere up through here.
It's also lining up with your volume profile too, right? Where you could argue that that's a consolidation zone where bigger sizes could be accumulating contracts for this ultimate move higher, right? So things are leveling out, trading sideways. You're accumulating, you're creating a hidden bullish divergence there against price, and boom.
Yeah, and then you got two higher time frames that have not yet fell apart, you know, and that's one thing to take in. Well, that's actually probably one of the first things to take into account is you've got two higher time frames that are supporting this idea, right? Yeah, I guess you could call that a top-down analysis is what you could call that, you know. So yeah, that's it, man. I mean, you just look for these areas. Even on this trade, right? You would only have taken in this morning, you know, 4 ticks of drawdown before you were in the money and moving your stop to break even. You know what I mean? And then you were along for the ride. You just set your sell orders up this morning. This happens over and over and over and over. Though, you know, it's kind of crazy because, you know, this morning I was calling for the shots of these levels, right? 39.57, way early, and calling for 39.72 way early this morning. And I'm talking literally to the tick. Price touched and then started immediately retracing, and it wasn't around any of these levels. You know what I mean? Which tells me, hey, I'm not the only cat looking at this, right? There's no way. Otherwise, why would price start to back off at that just random price? You know what I mean? Doesn't make sense. Other than, you know, there's legitimacy in that particular strategy. You know what I mean? But it plays out. You know, I mean, if you're making money, there's obviously legitimacy in it, you know. But yeah. Pretty cool. I mean, that's you know, that's one of the many pieces in terms of what I do, you know, when I'm trading every day. You know, this has nothing to do with me, you know, scalping or in and out in between levels or whatever. This is just where my bigger moves come into play and what I'm doing to get myself on the right side of that and see it typically before anybody else does and somehow end up on the tip of the spear. You know what I mean? So, I mean, you know, this kind of move is big enough for everybody to take advantage of. You know what I mean? Even if you were scalping, you can scalp in between these levels and still have made a great fucking day, of money just scalping in between these levels and off these levels all the way up.
Yeah, you have a good amount of bull flags right there, right? Where you made a nice push up, you kind of pull back in, and then boom, push up, pull back in, and
over and over.
I wasn't watching the market today, but I mean, you could even argue that if the market overall, in terms of the breadth, the advanced decline line is positive, you have a lot of confidence buying those, right? You just buy, your 3 lots that you're in, you take those pushes, take your profit, pull back, enter in again.
Oh yeah. I mean, you look at all just over and over and over and over, right? Bull flag after bull flag after bull flag after bull flag. I mean, it was just
right.
Yep. Absolutely. So many different ways you could have played this, So many different ways. Obviously bull flags would have been the best because obviously your stop you would have been immediately in the money on pretty much every single one of them bull flags. Very, very little risk. Yeah, bull flags would have been pretty sporty to play today, for sure. But I don't know, man. I wouldn't. This right here looks pretty good. I mean, I wouldn't be surprised if this doesn't play out the same way this played out at 4:30 this morning. I mean, I really wouldn't. If we come back down here and happen to touch this 39.60, and as long as this did not make another run up, we actually come back down, take out this low to 39.60. I couldn't buy 39.60 confidently, but I could let it run up and then come back down here and maybe buy it off of this 39.61 for that 7.6 retracement, and you would only have, what is that? Maybe $1, a little over $1, a little over a point of drawdown, at risk. And then just mark it up, right? I mean, mark it up from 7.6 and run your levels up, and you'd probably end up somewhere well in the 4,000. Yeah, it's all hypothetical, but that's how it works, right? I mean, that's what I'm looking for anyhow. That's where my brain is at looking at this current chart right now. I just give you a little insight what my brain's thinking. Yeah. Oh.
Hey, I appreciate your time and the conversation and you going over your strat, and we'll catch you tomorrow in the room. I'm gonna take off. Thank you again.
Hey, no problem, man. I'm glad you guys got something out of it for sure. Well, guys, if y'all ain't got any more questions, man, I'm gonna cut it loose here. But if you got any more, I'll answer them. Be more than willing to.
I appreciate your time.
Cool. All right, man. Well, you guys have a good one, dude, and we'll see you guys in the morning.
Magnus, appreciate
thanks,
it, man.
Magnum. That was
problem.
good.
See you guys.
Catch you later.